Welcome to this investing series webinar. My name is Theo, Admirals Global Educator, and I really would like to welcome you to this investing series. Now, before we start, just let me introduce you to this brand new series we launched. Today, it's the first, of course, the first launch. So, our aim is to help you learn about investing, to help you understand how you can start investing. Most importantly, in my opinion, why someone should become an investor. And of course, if you find it appropriate, you can act upon your absolute best interest. So let me change my name here so everyone can see how to pronounce my name, not Admiral's host, just Theo. Hello, guys. Hello. If you kindly use the chat box below, I sent a message here. Let me know where are you based, in which countries. I'm very interested to know. From some names, actually I recognize them from the live trading webinar in the morning. They joined me on the live sessions. Thank you so much for your support, guys. I really appreciate you. And of course, those who join us for first time, absolutely appreciate everyone. Argo, hi Theo from Estonia. Now, beautiful country, beautiful country. I visited Estonia and it's nice. You have nice burgers there, guys. Todor from Bulgaria, awesome. Christina, hi Theo, thank you for the event from Poland. Wow, nice. I personally based in Cyprus. I'm Greek Cypriot, the background. Well, and let's get started, guys. In the meantime, especially on this first introduction webinar, please ask me anything you need to know in your opinion about investing, of course. And it will be good to know if you're currently investing on something. If you're brand new to investing, you can also let me know about that. So I know how to best assist you. And especially for those who attend my webinars for a while, you guys realize that I don't like to go by a textbook. Then based on the slides I prepare, I like to know you in the field. If you are investing, to know how I can best assist you here. All right. So let's dive into it. It's worth to mention that purely all the information I will share with you today under there is no way to be taken as a personal advice or any investment recommendations. It's purely for education purposes and from my my experience in investing. So for those who are new with me here, I'll let you know that my name is Theo. I invest for actually for more than 12 years, but I just keep it around more than 10 years. As a background, I have a master in physics. I finished the university in about physics. Also, I have a master's degree in physics. When it comes to investing, I really like the cryptocurrencies and the tech stocks mainly, rather than other stocks. I hold other stocks as well on my portfolio, but with the tech stocks because it's something that I understand a bit more. I have the majority of my portfolio built in with technology stocks. Also with cryptocurrencies, I start investing, I can say, since 2017, and I never regret it. I'm very happy with that. And it's something that I like to talk about, the cryptocurrencies, when it comes to investing as well. And here at Admirals, I'm an educator and analyst, purely on trading and investing. So if you are new also to our broker, we are covering many countries, holding license from countries all over the world. Some of them include Cyprus, of course, Estonia, UK, Australia, Canada, and many more. Now, about the stocks here with us, just to, I believe it's good to know a few things about our services here when it comes to investing. You can hold a portion, a fractional shares with us. So, for example, Tesla prices is, let's say, an X number, and you don't want to use that X amount of figures, and you want to invest just $10, 100 euros, whatever you want to invest. You can do it with the fractional shares, and it's a really useful feature. Of course, when you hold investments, there is no fees like overnight fees or to pay weekend fees or monthly fees. All right, it's a totally commission-free. You can refer to the terms and conditions to read more about that, and you can access our investment instruments from the native platform we have or from our mobile application. If you haven't downloaded, please go now. I can give you a few seconds to go now to your App Store or to Google Play, type Admirals, and simply download it from there. All right, it's very simple to use it. I personally prefer to invest using the application rather than the MetaTrader platforms. Why? Because it's very user-friendly, the app, and with just some seconds allows you to find the instrument you want to invest in, to just place your investment, and just that's it, just leave it. All right. So what we're going to talk about today, guys, again, I will keep this session as a very introductive session. We're not going to go deeply to investment, of course. These are a series of investing, and they're going to be on more on a weekly basis. So every week we're going to cover a subject. Today, it's just more as an informative about investing and what's going to be down the track. So first thing we're going to talk about will be, as you understand, the reason of someone why should invest. If I have, let's say, extra $100 a month, why don't I go to the, I don't know, to a shop and buy some goods, and that's it? Why should I use some of my extra money, currency, to buy a share, for example, or to invest them on an ETF or on an index, and not just to buy something that it's gonna just eliminate the possibility of investing. Next, we will see the types of investments. What sort of investment types do we have available, and how can we utilize on them? We will talk also about risk and return. That's crucial, crucial. We will learn some new terminologies that they refer to investing. We will mention some plans and some investment goals, if you like it. We will go through some of the very common mistakes investors tend to do at the beginning. And in my experience, the one and only reason, or if you prefer, the major reason why investors go through these common mistakes, it's not because they want to go through the common mistakes, it's simply because they don't have the necessary knowledge about investment. And that's why they lead it down to that path. So we will mention them, we will explain them. And I hope from today, we're not gonna do them. Or if you are investing for a while and it happened, you did some mistakes. Of course, we are human. I did all of them. Okay, so it's a good way to learn and move onwards. And of course, we're going to give investment strategies. So you know what sort of ways, if you prefer, you can use towards an investment. And at the conclusion, we're going to wrap up. So let's start with the first one. Guys, by the way, if you have any comments, anything you would like to say, remember you can use the chat box below. So why someone should invest, why we should start investing? And you see, I use the word should here because in my opinion, it's something every one of us at some point has to consider the benefits of investment and then look down to this path. All right. And exactly that's why we are launching this series. Someone can use the investment as a vehicle to build some wealth. For example, if you have, let's say, I like to keep things simple and just use the number of $100, but I see many people live in euro, so allow me to erase this in Europe, sorry. So I will just use the euro symbol. So let's say we left every month with, after we cover our expenses, after we cover what we believe it's necessary for our daily living, mortgage or loans, whatever, personal things. And we are comfortable to use 100 euros to invest. Now, imagine if you're investing 100 euros for the next 20 years, that means 20 years times 12 months, that it's on each year, that make it 240 months. In 20 years, you have 12, 24, 240 months. Now, if you have spare 100 euros to use towards an investment, it means you invested in 20 years, 24,000 euros. Here it is. These 24,000 euros, if we take it in a yearly return on average about 8 to 10%. I will just put 10% for the equation mainly. That makes it in 20 years a return of, on average, let's say 200 to 250,000. Now, every time we leave our money on the investment, we get the compound interest or the CI. Compound interest, it means I reinvest, but in the meantime, the existing investment, it's also reinvested. So this example here refers, as the numbers are shown, that we deposit once on off 24,000, and with a 10% without compounding interest, with 10% a yearly return, it's going to give us in 20 years this amount of money. Okay. For next time, if you want, I can create a formula for you and I can share the compound interest, or I'm sure there are many tools on the internet that you can just Google it and put the numbers there and you can find it out. Okay. Some of them, they take consideration also the inflation and so on. So investing will help us to build a wealth over time. Other people can use investment towards retirement. So if your goal is to retire and have some money on the side, and you start using 100 euros a month or 50 or 200 euros a month, and you are consistent with the reinvesting process, and you manage to find some investments that on average, they give you a return between 8 to 10% a year, and you do this for 20 years in a row, the results will be most likely significant. All right, so it's very, very powerful to be consistent if you're gonna try to build either wealth or some income for your retirement. At the end, when we will review the investment strategies, we will go through this one again, and it's going to make more sense if you have any questions about that. Then we can invest to earn some money to use them towards a business, or use them towards to buy, let's say, a car, or if we want to buy a home for ourselves, or we can use the investments to buy a rental property that is going to help us generate more income from that one. There are multiple ways. Guys, do you have problem with the connection? Theodorou says that you cannot hear very well, or is the connection slow? I don't understand. Guys, please let me know if you have any problem with your connection. Next one, different types of investment. We can invest in stocks, or we can invest in bonds, or ETFs, or index. Whatever makes the investor more comfortable should turn towards that type of investment. Like someone like me, for example, who likes the tech stocks or the automotive stocks or any other type of stocks you like. You can focus on that area. For example, you can make your research, and you can start investing and build up a portfolio based on, let's say, more based on stocks, because in a while we will learn about the asset allocation and the diversification in the investment. Okay, so you're not restricted to only one asset or to one sector. You have thousands and thousands here at Admirals. When you download your mobile application, and you're going to see there are thousands and thousands of investment securities you can buy and hold. There are people, they prefer to invest on the index funds. Some index funds like the S&P, I think you find it with the letters SPX on the application. The S&P 500, it shows in the last 20-30 years that on average it performs anywhere between 7 to 9%. Some other researchers show it from 8 to 10%. Okay, so I will just take the minimal, that was 7 to 9%. Imagine to invest on a monthly basis a specific amount on the S&P 500. After 20 years, most likely, if it performs the way it performs in the past, it can give you a lucrative return, which of course it's a significant, right? Based on the numbers, imagine 7% or 9%. Some months maybe it's going to perform with 12%, some others going to perform with 7%. So on average, it's a healthy and good return. Now, risk and return. We have what we call a low risk investment, but that also comes with low returns. And that's something the investors will decide what sort of investment he or she would like to go with. There are high risks with high returns. So what we usually say that the higher the risk, the higher the return. The lower the risk, the lower the return. There are many stocks that they just, if you watch them on a daily basis, like they just spike very much. But again, to invest in those fairly new or low volatility with massive spikes just because of the expansion or of the manipulation, yes, it produces high returns. You at some point the amounts can be double and triple, but also the risk is very high because nobody guarantees that if it's going to spike to the upside, you're going to manage at that particular moment to get out of the trade, out of the and sell the investment. All right, just to make sure, when I use the word trade, I'm not referring to leverage trading or any CFD trading. I'm just referring to the investment and only. What I consider as a low risk, and I prefer just to talk now about stock market, okay, is to find the companies, for example, they are the top 10 companies overall on the S&P 500 or on the NASDAQ. And those companies, they, in my opinion, they are low risk stocks to invest. And of course, their returns, they are not going to be lucrative like this one here. Okay, so low risk comes also with low returns, but again, it's more safe. Or you can use other instruments to buy, like the S&P 500. Instead of go and buy the Amazon, for example, itself. you can skip that one and use the S&P 500 as your investment vehicle. Or you can allocate your money. You can put, let's say, 80%, just as an example, on the S&P 500 index, and you can put 20% towards the Amazon. We also have some important terminologies in investing, and it's good just to go through and read them so we understand what do they mean when we will refer to these terminologies. So first one is dividends. There are many companies that they pay dividends. Like if I recall, on Thursday, Alibaba will have a dividends payment. Yes, I think so, because Volkswagen today has earnings report, and on Thursday, Alibaba, the dividend. So what is a dividend? A dividend refers to a cash or a reward that a company gives to shareholders. And usually they pay to the investor into their investing account. All right, so we can search for companies if you like this idea and you are, oh my God, I like to buy only shares that they offer dividends. You can search for the companies they do pay dividends, and you can use your you can build an investment strategy based on this idea. Portfolio, it's a basket of financial assets. Like many times, maybe you heard in my portfolio, I hold this and I hold that, and I hold cryptocurrencies like some Bitcoin, some Ethereum, some Solana, some XRP, and I also hold some Amazon shares. I also have some ETFs and so on. So that's your portfolio. Diversification, the third word. That's the spreading of investments both among and within different asset classes. All right, this is what we call, we don't need to keep all of our eggs in one basket. What if the basket falls and the eggs, all of them break? We can split them into different baskets. Now, different baskets here can be mean like different sectors, maybe different different strategies as well. Asset allocation, investing in different sectors rather than keeping all investment in one sector. Basically, asset allocation and diversification, they can go well among together. They don't mean the same thing, but they have similarities in terms of, okay, I want to invest only 100 euros. What should I do? I rather buy some shares of this, a little bit of an index, and a little bit of cryptocurrencies, for example, rather than just go to only one share, only one stock, and buy 100% of one of that one stock. Or if I decided that I would like to start with stocks, that's the only thing it makes sense to me. It doesn't make sense any index, any ETF. I don't understand this stuff. They sound very complex to me. I just want the stocks. Okay, I do have 100 euros to invest every month, and I want to play this scenario for a few years. What should I do, or what are my options? Again, without meant to give any personal or investment advice. For example, we can use some of the funds to buy stocks of the automotive sectors. We can buy, let's say, stocks of the technology sectors. We can buy stocks from the pharmaceutical sector. And if we take as an example the automotive sector, let's say we have the Airbus, we have airlines, we have BMW, we have Mercedes, we have Volkswagen. So we can split our funds and buy a little bit of all of them, or find 2 or 3 that you believe that in the near future they're going to perform most likely better than the rest, and you can use the funds and split them among these different types of shares. All right, so it doesn't mean we have one amount, okay, let's just put all of our money into just one share. All right. Next, setting goals and pretty much having a plan. Finding investment opportunities. As I already explained, we can make our research, and I think it will be good to make some videos and send you guys about how to browse through the application, the mobile app, how to read the performance of the stocks, and it's going to help you a lot, because on the application everything is built in. Once you click on the stock to read all the relevant information, so you don't need to go on the internet unless you want and browse through different websites. We have everything built in there, ready for you to find it and make your own research, read whatever you need to read, and then you just buy your favorite shares. You can do analysis as well, all right, of the risk tolerance. And you can decide for how long would you like to stay with that investment. You have the absolute freedom to decide when you want to buy and when you want to sell. Nobody will tell you for how long to keep it, or for and at which price you have to get out. Excuse me. Everything depends solely on how would you like to plan your investment. Okay, so by having a solid plan and some goals, of course, everything can be readjusted down the track, but it's good to start with a plan and a goal. Otherwise, we will get forced, if we don't have a plan, a goal to start with, we're going to get forced to repeat or do the most common mistakes we usually see people do when they invest. And the first one is over trading. And that's also something that I would like to stay a little bit with. Why it's a mistake to over trade? This mistake, it's the cause and it's the root at the end of these two outcomes. When we overtrade, at some point, we think that we know. Again, when I say overtrade, I mean we just buying, okay? We don't do any If you are a trader, again, don't mix this for people that they are trading, that can be confusing. Don't mix the two. Here we talk about investments. We talk about a non-CFD product. If you are new to investing, so don't worry about that. I think there is no confusion for you guys. So when we have the tendency to overtrade, at some point we start buying shares based on how we feel about that stock, about the performance of that company. We don't do any kind of research. We forget to scroll down on the mobile application and read the important news, the factors, when the company is going to report earnings, if they, let's say, change a CEO of the company, if some rearrangements in the structure, if let's say it's a pharmaceutical company, something that we are all familiar with. It's the pandemic starting in 2020, and the pharmaceutical industry, it's like record some of the companies, their highest profits since the last 20 years. Okay, because of some factors affect a lot the prices of the share. So we get into the trap to not analyzing in a very basic way the stock that we are about to invest in.
Here's what
Also, we tend to forget about diversification, and why this is important. It's crucial. So, as we said, diversification is not keep all of our funds into exclusively one share. As I start with shares, I will keep talking about the stock market. For example, as we said, the pharmaceutical sectors experience great return. Many companies experience great returns the last few years due to the catastrophic pandemic. Now, if someone was investing and kept all his or her funds into the Amazon, for example, let's just pick up a random one. I believe everyone is familiar with what Amazon share is. Amazon company, not share. So they would have missed great returns on their investment with the pharmaceutical expansion. So if you decided that, okay, I would like to diversify this, the money I will use towards the investment, you can go back to the plan. You can go back to your plan and say, all right, as I have a plan now and I'll create my goals, my plan, if I'm about to invest every month 100 euros, and I understand well, let's say something from the pharmaceutical sectors. I understand, let's say that Amazon is doing pretty fairly well. Also, I understand Google. I also understand what Apple is doing. It's just every September they are launching new products, okay, and they charge more and more and more for their services and their products. So also, let's say Mazda, for example, just pick up a random, or Mercedes, or any other automotive company is producing. Maybe you can go through a few of these in different sectors and have a look what's going on there. Do they have any news that they may affect the price? And again, I'm not talking about any arithmetic analysis, not at all, just basic logic. And okay, I feel more comfortable, let's say, with the pharmaceutical companies. So I rather to put, let's say, 70% of my funds on this one that I understand well, and then this 70% I'm going to split it into 2-3 different companies, and the rest 30% I'm going to split it, let's say, among Apple and maybe Mercedes or Amazon, something else, but to split them, because maybe an event will change soon and Mercedes will invent, or they're going to use something on their cars. They're going to make electric cars, and it's going to be in a way that people, they're going to demand it a lot, and they can skyrocket their share price. So it's not it's not by just having the biggest amount on one investment. Okay, it's by having some amounts into different stocks that will allow you, if that stock price is going to rally, so you are in the rally as well, and you don't left out. And of course, when we have a plan, most of the times, all of the decisions we make, they are more rational rather than emotional. Finally, we have the investment strategies that we can use them as investors, and we decide how we would like to invest. Like different personalities, they have different risk tolerance, they have different beliefs about investment, they have different, they want different from an investment. Some people, they like to go purely on analysis, on the analysis, and to value the investment. Like, if I believe that the stock price now, based on my analysis, is undervalued, so I would like to buy that one, because based on my analysis, and that involves numerical analysis, I believe that in the near future it's going to rally, and I would like to play this type of investment strategy that suit my personality, that suit who I am, and that's what I understand better, and I also enjoy. Other investors, they prefer to invest with a growth strategy. They like to buy, let's say, again, I will go back to the Amazon. They buy the Amazon and they wait for the price to reach a certain level that they feel it's enough, and then sell it and get out of the investment with that profit. So they use the growth strategy for growing an investment account. And other people, they like the index funds investing. The most popular, among the most popular, is the S&P 500. And what usually happens with this one, investors, they deposit an initial amount. Let's say I'll just use 1,000 euros, for example, on the S&P. And every month, you just reinvest any amount you want, from €1 to any amount you want. So I will just use this example of 100 euros. So every month, if you reinvest 100 euros and you let it combine, we mentioned at the early beginning of this webinar that on average, the performance of the S&P based on the last decades, we have reference, it was anywhere between 7 to 9% annual growth. Okay. So pretty much that's it. Guys, any questions, please? From me, that's what I would like to cover for the today's webinar. Guys, does this make sense to you? Do you understand? We make an introduction of investing today. In the next session, we will go more into stock investing and then into index investing and so on. So if you need anything, please refer to our website, admiralmarkets.com. I don't see any questions coming in, so all right. It was a privilege and honor, ladies and gentlemen, to host this webinar for you. So I would like to wish to everybody to have a lovely day ahead. Thank you so much for your participation. If you have any questions, please leave a comment after we end the session or send us an email, and we are very happy to answer all your questions. So have a great afternoon, great night, and I look forward to see you again next time on the second episode. Thank you so much.